We just walked through a number of trends. I would say the top three we would focus on is, one, on the concern side, we are seeing a lot of capital coming into the venture capital asset class. This is true in North America, it's also true in Europe and other parts of the world. And as a consequence, valuations have gone up and the pace of investment has gone up, especially on the growth side of the market. So that's definitely a concern. On the plus side, trend number two I would highlight is that the innovation cycle remains very strong. And what I mean by that is the quality of companies being created, the founder quality, the potential markets they're going after are very big. And so we feel overall the current crop of startups remain very strong and will remain strong in the foreseeable future in this strong innovation cycle. A third trend is around liquidity. We've had a number of liquidity events over the last 12 plus months, both on the IPO side with some notable large IPOs and also some acquisitions. And it's great to see acquisitions now not just in the few hundred millions but multi-billion range. And all of these have really moved a needle in terms of both the multiple and the DPI, i.e. the liquidity. And we're looking forward to the IPO window and the M&A window being open for the next 12, 24 months. One of the significant changes that we're focusing on is the fact that companies are staying private longer. It's taking about 7 years, that's the global median, for a company to go from initial funding to M&A event. It's taking about 10 years for a company to go from first funding to IPO. That's a long time. And what's happening over the time with successful companies is they keep growing, they accrete in value, they're staying private obviously, and when they become IPOs someday, they're much larger IPOs than back in the day. So what that means is a lot of the value creation that used to happen in the public markets and used to accrue to public investors is now happening in the private markets. So the goal line has been shifted a little bit away from public investors towards private investors, and institutions are looking at their total allocation to publics, especially public tech, and rethinking how they allocate to public tech to get high growth technology companies versus private tech, i.e. venture capital. European venture has come a long way, especially in the last 5 years. We just shared data looking at 20 years of our experience in Europe on the venture side. And if you look at the data from 5 years ago, it didn't look that attractive, but the last 5 years have been very, very strong for European venture. There have been some large global exits coming from the Europe venture portfolio, and we think that continues. We're seeing great company formation in Europe, in the consumer side, in enterprise, in fintech, and we believe that Europe has arrived, and we think that the world-class returns we're seeing in European venture will persist in the coming venture cycles.